Good morning. For Traders Exclusive, this is George Skachuk with RCM Wealth Advisors reporting to you from CME Group Trading Floor in Chicago. This morning what I'd like to talk about is the direction of equity markets, what we're seeing in the S&P 500 sectors, and a few select stocks. So basically, if you look at the indexes at the S&P 500 and the NASDAQ, if you look at them on a daily basis, pretty scary. We're still in this trading range. It's a chop zone. Basically, there was a bloodbath on the market last Thursday and a huge reversal to the upside on Friday. So pretty scary, and you're either going to get scared out or shook out of the market if you're trading on a daily basis. However, if you look at a weekly chart at the S&P 500 or NASDAQ, you'll see that 9 out of 10 weeks the indexes have been up. They're trading in a tight range, but they've been up, and they've been up on greater volume than previous weeks or in the one down week that we've had out of 10 weeks. So that tells you that the longer term trend is still intact, and depending on your sort of risk level, tells you that you might want to be in this market. Or let's say if you want some more confirmation, you might want to wait till the NASDAQ gets above that 52.32 level, breaking out to a new high. That'll tell you that we are indeed in a confirmed uptrend. And of course, on the downside, if the NASDAQ were to close below 5,000 on a weekly closing basis, that may tell us that we're not ready to go higher yet. Same thing on the S&P 500. You may want to wait till it closes above the 2117 level or the 2135 level, which would put a new all-time high before you're convinced that the market has more room to run. Or on the downside, if it closed below 2019, tell you that indeed the market's not ready to go higher. But what we are seeing is the NASDAQ 100 had an all-time closing high on a weekly basis. So that's nothing to discard. So you need to check out what some of those stocks are doing. Now, if we look at the XLK, which is the ETF for the technology sector, that also hit an all-time high on Friday. And it's led by some familiar names, stocks like Google, a new high. It's a little bit extended. There's a stock like Facebook that hit a new high. It's pulling back and it's basing. You can look to see how Facebook pulls back maybe to this 50-day moving average right around 100. You have a stock like Microsoft that's extended, so you don't want to chase it. And one stock that we were adding to on Friday was Apple. Apple's a widely held stock, but it had a strong volume move off its 50-day moving average, and now it's trying to get to its 200-day moving average. So there still is some resistance, and the fact that the 50 is below the 200-day is a bit of a negative. However, if it suits your risk appetite and you have a stop in place, you can put it 5-8% below the levels you're buying it at, that's something you might want to look at this morning. Now, the next sector that's doing really well is the consumer discretionary sector. As you see, is the XLY, and that's led by stocks that's Amazon, that's extended, Home Depot extended. However, you have Starbucks and Nike, which are basing, so you might want to look for an entry point in there if they bounce off support levels or if they break into new highs. A stock like Monster's right at the pivot point this morning. It's trying to get into new highs. It keeps pulling back over the last week, so it hasn't failed. It's just moved sideways. And then, of course, we saw Ulta Salons just huge gap up on earnings and run away, and that's extended. Now, if we look at consumer staples, that's an XLP ETF. The big leader there is Kroger, and that symbol is KR, but again, that's extended. Now, of course, financials are doing pretty well. We talked about that previous weeks. That's looking at the XLF. And then we want to avoid, for now at least, we want to avoid energy. That's the XLE and the XLU. They just continue to hit new lows. And healthcare and industrials are still treading water. Now, getting back to the technology sector, some of the stocks you might also want to look at there is some of the semiconductors. Avago, see if you can take out that 150 level. It also had a big gap up on earnings, and see if it can move higher. In the cybersecurity software space, Palo Alto Networks approaching a buy point at about $200. It also had a nice gap up on earnings. So these are some leading stocks and names you want to keep in mind. In the software space this morning, you have EPAM Software, EPAM, trying to break out a new high. It's unclear yet if the volume's sufficient to carry into that high, but again, that's something you just want to take a look at. So the negatives in this market are that breadth just marginally improved, didn't get any stronger. Transportation sector still lagging, except for the airlines. They're doing very well. Stocks like Alaska Air, ALK. So that's something, again, you might want to take a look at. So those are some of the negatives, though. The breadth in transport's not participating. So in summary, what I'm trying to say here is there's a lot of good things happening underneath the hood, but if you're trading on a daily basis, you may get scared out or shaken out. So you might want to sort of rethink, take the longer term view, buy stocks that are coming to support levels, take a look at some weekly charts, and things don't look that bad. at least not at this point. So as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.